Since this video only presents educational content and it's not a financial advice, I'm not required to use a live account, so I'll be using a demonstration account, and I expect you to do the same thing. Translate the experience, translate this knowledge into experience, and then you can go on and execute in your live account if you wish to. But first, you have to backtest the strategy. Before I executed this in my live account, I went through an extended period of backtest, and I'll show you the results straight away. Here, this is the results from the strategy. You can see this. What's the first day here? This is October. Yeah, this is October 21st. So it's barely a month of backtest. It's approximately 3 weeks of backtesting results, and we have $23,000 profit in our demonstration account for backtesting this EMA rejection strategy. So you can also apply this method, create a demo account to backtest a specific strategy and see how it performs in a week, 2 week or so. So if you actually look at the trades, you can see we have very few losing trades. 1, 2, 3, and 4 only out of all of this series of trades. I can't actually do the counting. Yeah. So the EMA bound strategy, what EMAs are you going to be employing for this strategy? One is EMA 50, another one is EMA 200. I'll give you a moment to look at my charts and see if you can observe anything from the chart. Can you see anything? If you don't, I can. Now I'll give you the rules of using the EMAs. Once price is above your EMA 200 and your EMA 50 is above your EMA 200, you are only going to be looking for buy opportunities. What did I say? If price is above EMA 200 and EMA 50 is above EMA 200, you are only going to be looking for buy opportunities. If price is below the EMA 200 and EMA 50 is below the EMA 200, you are only going to be looking for sell opportunities. Now, in every trending market, there is a characteristic. I will illustrate that here. If your market is bullish, price tends to trade into premium, return back to average. It can actually penetrate a bit into discount zone and then speed off back to break previous high, returns to average. Now, what actually is your EMA? Exponential moving average. So it tends to measure the average of price. Instead of you see volatility like this, your EMA is going to give you just this value, the average. That's your EMA. Now, markets tend to trade back to average and into premium in a bullish trend. So if we have our average price like this, it means market is going to trade above it, trade back into it, and if price is below average price, that means it's discounted. So it's going to spend a little time in discount zone and then fly above previous high, come back to around average, a little bit into discount, trades above. The opposite is also true for a bearish market. So if you have a bearish market like this, price is going to trade from average or from premium into discounts, trade back into average, can penetrate a bit into premium, trade back into discounts, back to average. So this is why you actually have your trend lines. So your trend lines are actually instruments that help you to gauge average price in the market. So if you have a bullish trend and you're trying to fix in a trend line, you are only trying to know when your market comes back to discounted or average price. So the EMA strategy is actually a more flexible strategy than using trend lines, because it is going to point out flexibly the current average of your market. Now the EMA 50 in this case, which is this thin white line, is showing me the average price of the last 50 candles. So at this current market price, it simply means if I sum up the last 50 prices, this is the average. Now in a bearish trend, market tends to trade into average or above average into premium zone and then fall back to discounts to create a lower low. In a bullish trend, price will trade into average, slightly into discounts. Here, bullish, trade back to average, a little bit into discounts, and then come back to violate previous high. So typically this is how your trends trade. So I actually introduced using EMAs because a lot of my students cannot, especially the new ones, they don't find it easy to analyze the market structure and the trend. So giving them support of this EMA help them to actually build good analysis while they try to master trading with the bear market structure. So these are the rules. Just like I said, we only look for buy opportunities when market is above price and EMA 50 is above the EMA 200. We look for sell opportunities when EMA 200 is above price and EMA 50. These EMAs, we actually use them as a point of interest. If you have made research about EMA, you will know that EMAs, your moving averages, they act as support and resistance in the market. So they probably point out zones where market can possibly reverse. They point out zones where market can possibly reverse. Let's look at this. Look at this. Is there a reversal here? Yes. Back to the bearishness. Is there a reversal here? Yes. Back to the bearishness. Is there a reversal here? You answered that. Back to the bearishness. What do we have here? Same thing. Is there a reversal here? Yes. To the upside. Is there a reversal here? Yes. To the upside. Now, using this EMA rejection strategy, it simply means we want to be trading off these zones. So how do we know when to trade and when to not trade? First, when your EMA 200 and price and EMA 50 are expanding, moving away from each other, it simply means that is a strong trend. So markets like these are what we want to look out for. This market is 10x. Let me search for a back example we don't want to use. Okay, cool. You see this structures like this, we do not want to trade the EMA strategy here. Structures like this, we do not want to trade the EMA strategy here. Yeah. So obviously I have another strategy I used here. As you can see, I'm in a buy position in this particular trade, but this is not by using the EMA strategy. Why is this a bad example of using the EMA strategy? So once your EMA are closed, once they contract and price trade above and below them, it simply means market is consolidating. Market is in a range. But once your EMA start to expand toward one direction, it means market is in a trend. Look at this. Market is in a trend. Your EMA 50 and EMA 200 and price distancing away to one direction. It means market is in a trend. So I'll now switch back to my volatility 10S for this illustration purpose. So now you know the rules surrounding the EMA, when to use the EMA and when to not use the EMA. Now let's dive straight into the application of these EMAs as a trading strategy. I'll analyze from most current markets and trade it back. Now, you select a higher time frame of your choice. It can be 15 minutes, it can be 1 hour, it can be 4 hours or whatever, but I like to play around 15 minutes because it gives me a lot of opportunities to trade throughout the day. Now look at this. Look at this. How does this strategy apply to zones like this? How do we know that price is going to react off the EMA? How do we know that price is going to reject the EMA? This is how you do it. First, once price is trading into your EMA zone, so let's say this is our current market, we have not seen the next part, and then you start seeing movement like this, and you see price approach your EMA zone, you simply want to just box it up. Just add a box tool like this. I prefer to do it this way. Just add a box tool, and you want to expand price in this particular zone. So let's say right now we are here. Yeah, this is what we can see at the moment, like this. So this is what we can see. So you have price currently around your EMA zone. So you want to see if price is going to reject from average, from equilibrium, because your EMA is the same thing as equilibrium in your trend. So you want to see if market is actually going to trade from equilibrium back to discount, or slightly trade a little bit into premium and then back to discount. So you have to expand this view into a much lower time frame. So if you are in 15 minutes at your higher time frame premise, you can expand this to 5 minutes or 1 minute. I prefer to use 1 minute to expand. So this is my expansion, and this is my zone. You can see the box. This is the box. Now, this entire box is actually my higher time frame zone of my EMA. So I want to watch if price is going to reject my EMA for me to go short and trade to the direction of the higher time frame trend. What do you see currently? This is the EMA zone. And from pure market analysis, you can see we are still in a healthy trend. I posted a video of RSI divergence, so I'm not going to dive into that in this particular video. But you can actually use RSI divergence to spot weakness in this particular trend even before a reversal occurs. Now, let's say you're somebody who trades trend line. You can simply fit in trend line in this lower time frame right here. Fit in a trend line in this lower time frame premise. So what do we have? You're going to see a trend line break and a retest. Okay, that's an ugly trend line. So however you're going to fix it, trading with trend line is not my favorite strategy. So however you are going to fix the trend line, there is going to be a trend line break here. Now I prefer to trade with my pure market structure. We are in the higher time frame premise of my moving average. So what do you see here? You are going to see a reversal pattern if this moving average is going to be respected. So here we have markets failing to swing higher. We have a micro bullish trend, which is a retracement in higher time frame, trading back into my higher time frame EMA zone, where I anticipate a rejection within this box. Now this micro trend, you can see the micro trend slowing down here, failing to make clean higher highs. Instead, we are trading inside a range of resistance and a range of support. And then look at this, price breaks below this low and fails to swing back to this high or higher. What does this tell you? Bearishness. If you are someone who is going to also be trading EMA cross or some other reversal strategy, you will see it inside this box before price will reject that EMA. You will see it. So this is not actually a video teaching you a whole new concept or something, but this video is teaching you how to identify point of interest for reversals to continue a major trend. Now look at this. Look at this. What do we have here? We have this breakup structure and market failing to swing higher, and then we started trading lower. Now I'll contract my chart. Look at this. From this box, look at the rejection. Look at the move down. Can you see this? See this? So let's say you're going to trade from this rejection to this point because there is a breakup structure to the upside. So probably you might have been tempted to leave, but which range were you successfully able to catch? So let's say from 90.99 to from this rejection 90.88. This is 10 points, and if you are patient to this point as a scalper, because I'm using a very low time frame here, so you can see this is a whole lot of range actually. But how did you find it? Using your higher time frame EMA zone and watching out for reversal patterns around the EMA. Now just take a look at this. See how many times this phenomenon occurs in the market. Look at this. 1, 2, 3. In the last few hours, just look at how many rejections we have had. So you will be able to catch all of these rejections if you actually apply this strategy very well. Now look at this current price action. You might be wondering, isn't this a failed setup for this particular strategy? No. Here was a setup. Let me put it in the box. Here was a good frame up. This particular rejection here was a good frame up. You are going to see price reject in that box, and then you see price fail to make series of lower lows. Now look at this. So this is my point of interest here. Here. This. Now expanding that, look at what we have. So you see price creates a high, creates a low, creates a high, creates a low, fail to swing higher, and then trades down. So using your trend line or whatever strategy, you will spot your reversal around this zone. And then what happened? See price trading down, and then we violated this high. So it's high time for you to leave the market. So this, let me go back to my high time frame premise. Now when you look at this, what do you see? Before price traded back up to violate this high, we did not create a lower low. So this is a trend, possible trend reversal. But did the strategy show you when to get into the market? Yes. Did you make profits? Yes. So if you watch your trade closely, you will leave this premise with profits, because reversal started to occur without violating previous low. So this means the trend, the bearish trend, is already getting weak. If you use your RSI divergence or any oscillator to gauge the trend, you will be able to spot weakness around this point of the trend. You can see here price creating almost an equal low, not violating previous low the way it has been violating it in previous setups. You can see how price violated previous lows, but look at this one. So it simply means price, the bearish trend, is decelerating. That is why this trend could not violate this low, but it was able to give you profits. I'll come back and show you in a bullish scenario. Now let me isolate this section and use this for my illustrative purpose here. this is the first thing you do. So let's say a market is actually started afresh, so you can follow up correctly. So this time frame is when 3rd of November. So let's say we are in a market premise like this. You're seeing your bullish trend right here, and then price trades back to your moving average 50. You want to box up this zone and see if you are going to spot any reversal in lower time frame. So I'm currently in 15 minutes time frame. I'm going to take it down to 1 minute, and that was the 3rd of November. So I have to go back to expand that view for you guys, since that's very far. Okay, my chart stopped loading. I can't get that data yet, so I'm going to look for a more current opportunity to illustrate this. Okay, I think I'm there. This is 5th of November, 4th of November, and 3rd of November. Okay, we are not loading, so I'll look for another point to show you a bullish scenario for this strategy. We're in 10x, so let me check 10. All right, cool. So we have a lot of opportunities here presenting itself in 10x. So I'm in 10, sorry. So I'm going to pick one and expand it out. So this is 5th of November, 16:45. I will expand this to 1 minute. Fine. So this is what we have. Now let's say you like trading trend lines, and this zone right here, this is actually my higher time frame EMA zone. So I'm here to watch out for rejection. What do you do in this particular case? Just fit in anything that will give you information of reversal. This is trend line. What do you see here? A breakout of your trend line, retest, explosion to the upside. Can you see that? Very simple. Outside from trading your trend line, you are going to see market violating lower structures. What do we have here? This is a swing high, a swing low, and then market creating this small swing high and a higher low, a higher high, a higher low, a higher high, a higher low. So this structure manifested itself before it even broke the trend line. Possible you will spot RSI divergence in this zone. Yes, before this reversal happens, you will spot divergence maybe with your stochastic or something, but you have to spot divergence or something with an oscillator if you want to add a strong layer of confluence. Or you can just go with the pure price action. What happened? Break of trend line, and then we exploded to the upside. What happened? Market created higher highs and higher lows, violating previous highs, exploding to the upside. It is a very effective strategy. I showed you the result, guys. Yeah, it is very effective. Look at this. This is my demonstration account. Definitely, this is a very good result. I think this is going to be over 90% accuracy. I don't have up to this. I didn't make up to this in my live account. This is kind of big. This is really big. Yeah, I don't have up to this in my live account, but it paid pretty well in my live account. And since I am only teaching you guys a strategy, I'm not obliged to show you my live account. So you can see the results. you can see the strategy. We have the result here. I broke down the strategy. So what do I expect you to do now, guys? Go into your charts, start practicing this strategy. It is not going to stop working. The market is always going to create structures. The market is always going to be inflated. It's always going to be deflated. It's always going to trade into premium. It's always going to trade into discount. It is always going to trend. So if you are in a trending market premise, this strategy will always work. It will always work. So I expect you to go into your charts, your demonstration accounts to start with, and then start backtesting the strategy. Give it time, and see the results. Try to master it, and watch this video over and over again, and give me encouragement, guys. Subscribe to my channel, like this video, and you can also join my Telegram group, where I sometimes willingly post my setups, and other times I just post analysis for you guys to be able to learn from what I'm trading. And sometimes though, I do post trade calls there. So you can also hit me up if you want to learn more different strategies, how to analyze the market. You can send me a private message in Telegram or send an email. I will put all of my contact info in the comment section. So guys, go on and practice. I'll see you in the next video. Thank you for your time. Good luck and good trading.